Hi, I'm Michael Davidson. My website is torontocommercialrealestate.net. In the next 3 minutes, I'm going to give you a calm, realistic investor view for 2026 in the GTA so you can decide whether it makes more sense to invest, hold, or wait. If you're an active investor, an owner-user, or you manage family or institutional capital, my goal is to help you cut through the noise and focus on what actually matters for your decisions. If you find this useful, please hit like and subscribe so you don't miss my ongoing market updates and deal ideas. Let's start with sentiment. Investor sentiment right now is cautiously optimistic. Most people recognize that we're not in the same place we were a few years ago, but they also see that good assets in good locations are still trading and still performing. On this institutional side, REITs and larger funds are being selective. They are focusing on industrial, multifamily, and grocery-anchored retail where cash flows are predictable and tenant demand is deep. That might not sound flashy, but it's exactly what larger players want in a more uncertain environment: stability, income, and long-term relevance. At the same time, private and local buyers are aggressively pursuing small bay industrial and owner-occupied opportunities. They see the control, the operational benefits, and the ability to create their own upside through better management and smarter improvements. For many of them, owning the real estate they operate from is part of a long-term wealth and business security strategy. It's one of the best investments that you can make. Now, let's talk about the external factors that cannot ignore right now. The 4 big ones are front and center: interest rates, construction costs, government policy, and immigration. Interest rates affect your financing costs, cap rates, and buyer psychology. Construction costs influence whether new projects pencil or not, and they shape how much new supply actually comes to market. Government policy, from housing initiatives to zoning and tax changes, can either accelerate projects or slow them down. And immigration continues to drive long-term demand for housing, services, and employment space across the GTA. For any deal you look at in 2026, you need to be watching the Bank of Canada's moves, tracking construction input costs, and understanding how policy and population growth interact with your specific submarket. This isn't about predicting the future perfectly. It's about underwriting with realistic assumptions instead of wishful thinking. So, where am I most constructive over the next 12 to 18 months? I'm more bullish on 3 core areas: small bay industrial, service-anchored retail, and well-located purpose-built rental. Small bay industrial offers that combination of utility, flexibility, and scarcity that has been hard to replicate. Service-anchored retail, especially with strong daily needs tenants, provides steady income and resilience when consumers cut back on more discretionary spending. And well-located purpose-built rental lines up with structural housing demand, especially in transit-connected or amenity-rich locations. And on top of that, I see opportunistic plays in high-quality downtown office, but with a big asterisk. You need to see real leasing momentum and a clear path to occupancy before you get too aggressive. The days of buying an office tower and assuming it will fill itself are gone. This is about focusing on the best assets with the right stories in the right nodes. And with the right commercial realtor, that can help speed up the process and get the right tenant mix. If you'd like a tailored 12-month watch list based on your risk profile, time horizons, and target asset classes, send me a message. Tell me what you own today and what you're considering next, and I'll build a focused shortlist you can actually work from. If this helped you think more clearly about whether to invest, hold, or wait in 2026, please like this video, subscribe to the channel, and share it with someone on your team. I'm Michael Davidson with torontocommercialrealestate.net. Thanks for watching, and see you in the next quarter. Happy investing. Bye for now.